all of our conversations, it will not look good or real if we do not include the MSMEs, the small businesses, the bedrock of the nation's rail sector. How do we get them to work well? Well, a major challenge with them, we know, is the issue of funding, capital, and also financial inclusion. Well, to discuss this is Mr. Adesina Adeomi. He's the Chief Executive Officer of Trade Lender. He joins us here in the studio. Mr. Adeomi, good morning. Thank you for your time.
Good morning. Good to be here.
Would you say we are giving enough recognition to the MSMEs? We talk about them every week on this show. Do they have enough attention? They cover more than 90% of employment in the country.
I'm very excited about that statistics. I think we are not paying great attention to them, especially in terms of helping them to be able to build capacity, to scale, and also to be able to create the meaningful jobs that we want for our economy.
So when we talk about financial inclusion or access to capital, we know that a major source would be loans. But sometimes these small businesses find it difficult to meet up with the requirement, for loans. How can we make it better for them?
I think, first of all, the existing systems, and policies have made it quite difficult for these MSMEs who are just, boggling up to be able to meet up with these requirements. And this is why, the opportunity has also been created for digital banks who are able to understand and also use technology to help these small businesses to be able to access these loans easily. For me, I think the right step is first on the policy side, making some tweaks as regards to
What tweaks?
For example, the traditional banks, are legally required to actually give out these loans to people in specific sectors. But today, they are actually not doing that. It means that nobody is actually implementing and checking if they are actually giving those loans. And those policies need to be very strict on the specific categorization of SMEs that actually get it. Because when you talk about SMEs, is small, medium, and also can also be large. So most people who have been getting these loans are actually people who are on the higher scale, who can meet certain criteria like collateralization and several others, which the main people creating the bulk of the jobs, the informal sector, are actually not able to meet up with.
So we have microfinance banks that are supposed to, meet up with their needs and all of that. Aren't they enough?
Okay, just to give context, we have today over $29 billion in terms of a market for these SMEs who are currently excluded from inclusion, financial inclusion. So you can imagine what this microfinance bank, who today don't leverage on any technology, especially those big ones who are at national level, are actually facing. It means that they can actually reach out to a very small portion of these small businesses. And this is where the digital banks come in. You can call them digital lenders, you can call them digital banks, but there is actually a high need for the government, the legacy banks, to be able to work with the digital banks so that they can actually promote and also deepen financial inclusion for those at the grassroots.
Yeah, when you mention digital banks, all I remember is those text messages and all of that. Because I think the issue of collateral also is important. Those digital lenders, because they don't ask for collaterals, they take some aggressive steps to get their money back. Meanwhile, the traditional banks will ask for collateral. Where do you see a compromise? Should I say a convenient compromise for both parties?
Okay, so today what most of these digital banks do is actually to be able to do a reverse collateral. So why give a small business owner who actually just needs inventory, cash, when you can actually pay to the supplier to actually provide that inventory? What that actually removes is the risk of diversion. This is actually some of the steps that digital banks like us and several others have taken to be able to remove the issues around diversion and also need to actually ask for an upfront collateral. The banks today will still ask for collateral, which these guys cannot meet up with. And again, the banks are still leveraging on paper. Most of the banks are leveraging on paper. The digital lenders, while we understand that there are some loan sharks who are not ethical in their approach to recovery of funds, but most of those who have been approved by the FCCPC, there are about 167 names and lists, today, if you check their website, who are legally stamped to be able to support these small businesses. What they do is they have been able to create systems that helps them to be able to identify all in one platform, either the credit history, what they want to use the funds to, and also partner with the right people who can guarantee these guys and also provide inventory or various forms of assets in place of giving them cash. So for example, a small business owner in the Drumota market who perhaps needs a deep freezer to be able to grow and scale a business, instead of giving her cash, you can work with various partners, finance that on their behalf once you can qualify that they don't have a bad credit history, so that they can get that deep freezer to be able to grow.
But that also puts another burden on you. After you have helped that trader to get that deep freezer, you have to stay on that trader to ensure that when they have 1,000 naira, they drop it. When they have 2,000 naira, when they have 500 naira, if not, it can still get diverted.
Yes,
so that's extra staff, extra operating costs for you.
I don't quite agree. The beauty of it is digitization and technology has made all those processes quite easy. Today, most of the digital banks and the digital lenders have actually created a system that domiciliation is actually in their position, meaning that there's a wallet account which these small business owners have to be able to transact through and receive their payment. Before now, the cashless, economy, we have a whole lot of people receiving cash. But today, we have a whole lot of people who have also adopted the use of technology by being able to transfer. I think it's quite a significant move. While the process wasn't quite easy for us as a people, but I think that was a very significant shift to move people from the cultural norms to actually embracing digital systems to be able to make payment. And now the digital banks can track their transaction history and also recover back their funds.
Yeah, talking about making lemonade from lime. Thank you so much for your time. Yeah. Mr. Adesina Adewumi, co-founder and Chief Executive Officer of Trade Lender.
Thank you very much.